Why is €13 billion of our tax income sitting in a bank account in London?
Why is Ireland challenging the European Commission's insistence that this is money the Apple Corporation should have paid us in tax?
And do you know about the changes happening in the global tax world, which could see Ireland lose billions of euro in income?
Ireland's corporation tax rate is 12.5%. That decision was made over 20 years ago. So when a company declares a profit, it must pay tax of 12.5% on that amount.
Governments down through the years have defended this as part of a wider economic policy. It all goes back to a decision which fundamentally changed the Irish economy in the early 1960s.
Clearly, life would always be frugal in this state if something drastic wasn't done to capitalise creative industry along modern lines.
Hello, Pat.
Hello. Taoiseach Sean Lemass looked to move us from an internally focused, largely agricultural economy.
Is this a malting barley growing area?
Oh yes, very definitely. Yes, there are 3 malt houses in Tullamore.
Towards one which would attract foreign companies in.
That decision changed Ireland forever.
By 1970, there were more men working in the factories than in the fields.
The effort to make Ireland a base for outside investment has, in terms of jobs and tax take, been a huge success.
Others insist that these men may be doing more harm than good to the values and cultural ways of the old Ireland.
Foreign companies employ over $250,000 people here and generate €190 billion in exports.
Another bite at the growing apple for Leaside.
That's over half the total income, or GDP, of the country.
We continue the long-term expansion of Apple Computer in Cork.
Since the crash 10 years ago, the amount collected in corporation tax here has more than doubled.
Last year, it rolled in at almost €10.4 billion, which was €1.9 billion more than the government had expected.
Critics say the low rate lets big business off the hook, and the unexpected windfall proves Ireland is a tax haven.
We've shelter for the multinationals to avoid tax, but no shelter for people who have no homes.
Others say no. Our tax rate is clear and creates thousands of jobs. And the windfall just shows that changes in international tax rules have benefited Ireland, because many of the companies have real operations here, employing thousands.
So what's really happening? Why are we collecting so much in corporate tax? So much more than the government even forecast. In the aftermath of the financial crash, governments across the world began to look at profits accumulated by multinational companies. Obscure tax arrangements with odd names like the double Irish and the Dutch sandwich were examined. Apple, which had employed a different tax strategy, also came under scrutiny. A US Senate committee found in 2013 that the company had built up $102 billion in offshore cash holdings. Apple disputed this description. US senators said Apple had exploited a difference between Irish and US tax residency rules. Apple had subsidiary companies registered in Ireland. The companies in Ireland paid tax on their operations here, but the companies in Ireland were also used to record a large portion of Apple's worldwide sales. Because of the way the companies were set up, this money wasn't taxable in Ireland, which also meant a lot of income was never taxed.
Apple's 3 primary Irish entities hold 60% of the company's profits, but claim to be tax residents nowhere in the world.
Apple's response was the US needed to change its tax laws.
Eliminate all corporate tax expenditures, lower corporate income tax rates, and implement a reasonable tax on foreign earnings that allows the free flow of capital back to the United States.
So the US did eventually change their laws.
We will reduce the corporate tax rate to no higher than 20%.
And so did Ireland. The so-called double Irish, which allowed companies to be registered here but pay taxes elsewhere, is gone. Companies have had to either pay more taxes in places where they have operations abroad, like Ireland, or face paying more tax back in the US.
So some US companies with operations here have chosen to pay more of their taxes here.
And that is your €1.9 billion windfall.
That was really good news for us. But those changes are part of a much wider effort to alter how international companies pay their taxes.
There's been an ongoing battle between the European Commission and the OECD, a kind of club of rich nations, over who sets the agenda on tax reform.
The European Commission wants to introduce, wait for it, a common consolidated corporate tax base.
That's a system where a company is taxed in relation to the places where its products are most widely bought or used, not where the companies declare the profit.
For example, more may be spent on buying advertising on Facebook in France than in Ireland. So that company should pay more tax there rather than here.
Meanwhile, the OECD says it's looking at a slightly tweaked version of all that, and it wants to set a minimum tax rate for companies worldwide. Either way, it would be bad for Ireland's tax income and good for bigger countries.
The reason why we now need to be part of the global process in relation to the future of international taxation is to try to preserve the principle that tax should be levied where substance is created and kept.
All this, and in the meantime, a raft of new rules are being continually introduced to crack down on what's called tax avoidance, or if you prefer, aggressive tax planning.
In other words, exploiting the incredibly complicated international tax code to avoid paying tax.
The fallout from the changes put in place so far are best seen in the Apple tax case.
€13 billion is sitting in an account at the London branch of the Bank of New York Mellon, waiting for the result of a legal challenge taken by Ireland against the European Commission.
The Commission claims the computer giant was given a special deal on its taxes in Ireland, making it illegal state aid.
Two tax rulings granted by Ireland have artificially reduced Apple's tax burden.
Ireland argues that the tax breaks given to Apple were available to any company locating here, so it wasn't a special deal.
The outcome of the case is the potential to upend everything we thought we knew about corporate taxation.
It'll be watched closely from every corner of Europe and beyond.